Hey everyone, how's it going? This is your market snapshot for August 3rd, 2024. So last week in the market, we had a pretty down week. We can see that the SPY, or the S&P 500, finished down roughly 2.85%. Then you had the Qs, the NASDAQ down roughly 4%, and then the IWM down roughly 7.5%, actually 7.7 it looks like. So pretty much we didn't have any rotation last week out of the large cap into the small caps, which is what we've seen the last couple of weeks. Pretty much everything is down, but there was some rotation, and we can kind of look at that. So what we're looking at now, we have just 12 charts pulled up. In the top left, I have the SPY, which represents the S&P 500. And then the remaining 11 charts, those are 11 sectors of the S&P 500. And so if we want to look here, we can actually kind of see maybe where money has rotated out. So the XLK, that's basically the technology. So that's like your Apple and Nvidia and stuff like that. We can see it actually looks like it maybe finished lower last week. But then we can see a couple of sectors actually finished higher. The XLRE, which is the real estate, XLU, which is utilities, they finished higher. XLP, and that is the consumer staples. So all those finished higher. So it looks like basically just money is flowing out of a lot of the growth names and into more defensive type stocks. Stuff that pays a pretty decent dividend, stuff you want to be in if there's like a recession or something like that. So that's what it kind of looks like, maybe what the rotation was last week. So now we're going to look at the ES futures, or the S&P 500. This is a 20-day, 1-hour chart. And one thing we're going to note here, or I want to show a couple of different things. I'm actually going to go to the 4-hour chart real quick just to show something. So this is our the bullish trend that we had been in starting in roughly the middle of April. And if we want to zoom in on that, we can actually see from really May to June, we kind of traded in this channel here. And it looks like this 53, 54 area was kind of a resistance. Once we got above it, it acted as a support. And we moved up to our high, and we've actually came back down to this support area. And I'm going to show why this could be a stronger support that we think. Definitely could go lower, but I think right now it is going to be somewhat of a support. So this is the same chart, but with the Fibonacci retracement. And last week when I was talking, I mentioned how we had basically broken through the 23%, and we had got down to the roughly the 38% level. We actually came up close to the 23% again, back down to the 38%. And one thing that I mentioned for us to get back into possibly a rally to get to all-time highs, I said we would have to get above the 23% level, but not only that, we'd have to get above this level right here, because this is going to be pretty much kind of a resistance area as well. And we didn't quite get there. We did kind of get close to breaking over. We can actually see there was kind of a gap right here, and we can see we just barely kind of filled in that gap right here, but we could not get above this level right here. Last week I actually kind of drew kind of the trend here where we were making lower highs and lower lows. And we actually kind of did make a higher high kind of right up in here, but it did not match this high right here. So we need to get above that, and we did not. So that's just something to note. But, once again, this 53, 54 area, which basically kind of matched up to that the same area that I was talking about, that also acted as kind of a support and resistance back in roughly May and June, is roughly at the same area we're at right now. So this could be a temporary support area. A lot of times when you do have a pullback and you go higher, it's common to pull back to the 50% retracement area as well. If we do not hold this, obviously we have the 61 and then the 78, and the 61 puts us at 52.52, and then the 78 is 51.25, and then the full retracement would be roughly 49.63. But I won't be surprised next week, at least earlier in the week, Monday, if we have a small rally here. We could actually pull up and then bounce off and go lower, but we could also trade in a trend right here as well. So we're still in earnings season right now. We have a number of earnings coming up next week. So this is the list of them. So you may want to check these out. I do have a couple of different trading strategies on these. I'll try to link a video below, but primarily what I like to do is wait for the earnings announcement to hit and then pass. Wait a few days, and I like to find stocks that kind of have dropped or gap down is what I like to call it. And then once I feel that possibly maybe they have kind of settled at their low, then sell a cash secured put 45 to 60 days out. That normally works pretty well. And a good time to do it is right here after earnings, because earnings happens once a quarter. So we can do a longer duration trade and be in a cash secured put trade for 45 to 60 days to let time kind of work with us. And normally during this time we don't get a lot of news announcements that can come out and that can really move the stock. So that is something to look at. And speaking of cash secured puts, so this is the file we check out every weekend. This is the ETFs that I have listed here. Let me actually change this date. Okay, so we're going to stay at 3% out of the money right here. One thing that you will note is our IV percentile is roughly 100% on all of them. So that just means that this is the highest the implied volatility has been in the last year for a lot of these stocks. But IV can go higher, so that's something to note. But the VIX is roughly at 23 right now. It actually hit 29, I think yesterday. That was yesterday that high was reached. But we're looking at next Friday's expiration 8/9, 3% out of the money. Okay, and this is a page that I like to call the weeklies. This is just the S&P 500 stocks that offer a weekly options expiration. We're looking at the same expiration, which is 8/9, 3% out of the money. So it's 6 days to expiration next Friday. So once again, all of this is listed in an alphabetical order. We have the days to expiration here. We have the delta of our put, and then we have the strike price of the put listed right here. We have the bid and the ask. We have the return on capital for the trade listed right here. Return on capital annualized. If you see something, you can just pause it here as I'm scrolling down. Once again, we have the IV percentile listed right here. So we can see a lot of stuff is at 100%. Some of them will be listed that high because earnings, like right here, 3 days away. So you're going to have a high IV close to earnings. But some of these are going to be longer than 30 days, and it's still going to be high. Like this was, for instance, Goldman Sachs. And one thing to note here, this only shows 30 days out. So it actually could have earnings farther than that. This indicator just shows up to 30 days. And this is trading days as well, not calendar days. We also have listed if it pays a dividend or yield right here. We have the 52-week high and the 52-week low. So anyway, that's all I have for you this week. Thanks for watching. Have a great day and bye.